Hello and thank you for joining us for the latest MacDesk Floor Report. I'm Rebecca Darst from the MacDesk, speaking to you from the trading floor, and the MacDesk is located just beneath the Bell podium for any of you NYSE clients who are visiting the floor. We're buzzing this morning with the return of Level 3 to the New York Stock Exchange, so congratulations on that listing transfer. Markets are trading a little higher right now, but we'll see if that lasts, considering that the Dow has not gone 2 straight days without a triple-digit move in more than a month. This on a mixed bag of headlines this morning. Initial jobless claims for last week came in at 406,000 claims. This was roughly in line with the consensus, but the 4-week moving average for claims remains above 400K. And it's really hard to get too excited about even a minor shortfall in claims when you're up against chronically elevated jobless numbers. The October Philly Fed Manufacturing Index came in unexpectedly positive at 8.7, but this didn't move the market too much. NYMEX crude has pulled back about 0.5% today following reports out of Libya that Muammar Gaddafi has been killed. But once again, the market is tailing headline risk out of Europe, the European situation overshadowing even the most solid of U.S. corporate earnings. The latest is a report in German daily newspaper Die Welt, quoting sources close to the German government saying that this weekend's EU summit may be postponed entirely if dialogue on key issues surrounding the European sovereign debt crisis doesn't gain critical momentum ahead of the weekend. We're also seeing an ongoing debate over the credit terms for the EFSF. This is the European Bailout Fund, with one Bundesbank board member coming out this morning in favor of a lower than AAA rating for the fund, rather than allowing the fund to be leveraged by granting it a European banking license, which is a solution favored by France. The same Bundesbank member, Andreas Dombret, was also quoted by Bloomberg as saying that he could not rule out a Greek default even if a 6A tranche is granted by the Troika. Bear in mind that we're looking at some very unsettling footage of a general strike in Greece right now, and the euro-dollar cross is hovering just below its 50-day moving average, just under 139. It has not traded above that level in at least a week. VIX is up for a third straight day with a near 2% gain, setting the volatility index above a reading of 35. This also means that we're looking at a near 2-point premium in the spot reading of the VIX compared to the front month VIX future. That's the November futures contract. What this tells us is that volatility traders feel the biggest risk of turbulence in the S&P is very, very near term. Now, there were some large-scale new open interest accumulations in VIX upside calls at the November 35 and December 40 calls this morning, but these may have been seller-initiated. For additional market commentary, check your inbox at 1 p.m. for the midday. For now, that's it from me, Rebecca Darst, for the MacDesk Floor Report.